Hey everyone, after many years of struggle due to low asset quality, today Indian financial sector is in one of the best phase of growth due to beginning of new credit growth cycle and best ever asset quality. Hence today I want to discuss one of the very promising segment in Indian financial sector. It's small finance bank. Small finance banks are relatively newer format as it was started by RBI in 2014. So in this video, first of all, I'll start with why RBI started small finance bank, and then I've explained the difference between a commercial bank and a small finance bank. Then I've covered the key growth driver in this segment, and finally, I've compared top 4 small finance bank of India across your business and financial parameter. These 4 small finance bank include AU Small Finance, Equitas Small Finance, Ujjivan and Utkarsh Small Finance. Please note that the data point I have covered in this video are not available on screen or website. I spent a lot of time going through the reports of each of the small finance bank and compiled the data for this video. I hope you will appreciate my efforts. Just a disclaimer, this video is only for educational purpose, not a buy-sell call. And if you also want to identify top themes, trends, government policies that can benefit various sectors and stocks, then you can follow me on X. Of late, I have become very active over there. If you don't have an account on X, I would strongly recommend creating one and following right set of people. In case you want to know my investment strategy, I have a weekly series for a close set of serious investors on my website. You can also explore it. Alright, now let's get started with this video. To begin with, it's very important to understand why there is a need for a small finance bank when there are already established commercial banks in both public and private sector. And what is the key difference between both? So basically, in spite of having top public and private commercial banks like SBI, Bank of Baroda, HDFC, ICICI, Axis, Kotak, the biggest challenge for RBI is to provide credit facility to people in small towns and rural part of a country, because majority of these top private and public banks do not have enough branches in small towns and villages. And even if they have the branches, these commercial banks have strict norms for giving loans. Majority of small finance vendors don't have credit history. Hence, many loan applications from small business vendors and farmers gets rejected. Hence, RBI in 2014 under the leadership of then Governor Mr. Raghuram Rajan started giving license for small finance bank with the purpose of financial inclusion by offering basic banking facility to the unserved and the underserved section of the society, that include your small business owner, farmer, unorganized entity and micro, small and medium enterprises. If you look at the key difference between commercial bank and small finance bank, while both are regulated by RBI, commercial banks offer all type of loans, whereas small finance bank offer loans such as personal loan, gold loan, MSME loan, vehicle loan, etc. In terms of target customer, commercial banks are not restricted. They can cater to every section of society as well as corporates. However, small finance bank cater to small borrowers, unorganized worker, medium and small enterprise. And that's the key difference between both. To quantify this data, as per RBI, small finance bank must lend at least 75% fund to priority sector that include MSME, unorganized sector. And for commercial bank, this number is 40%. Hope you got a clear picture. Now let us look at the growth drivers for small finance bank. The biggest growth driver for small finance sector is the huge untapped opportunity in rural segment that constitute around 65% of India's population. As per CRISIL report, rural areas account for about half of India's gross domestic product but only constitute 9% of bank credit and 11% of deposits. Now in last few years, small finance bank have faced several challenges due to your demonetization and then COVID. As a result, their asset quality deteriorated significantly. However, now situation has improved a lot. The NPAs have fallen significantly and credit growth has been very impressive. In fact, now small finance bank have gained expertise in underwriting small loans to self-employed people who do not have enough credit history for assessing their credit worthiness, especially the top listed small finance bank of India. Moreover, today small finance banks are extensively using technology to expand their reach and optimize their operation and make banking more efficient and seamless. In fact, some of the small finance banks are also collaborating with new age fintech companies and creating win-win situation for everyone. For instance, Equitas has extended video KYC to new banking partners, and it says it can open bank account in less than 3 minutes. Earlier, we would open 20,000 account a month. Nowadays, 1.6 lakh a month. So in short, over the last few years, small finance banks have created a niche in their category and now expanding their model to all over the country. Since we are in the early stage of a new credit growth cycle with best ever asset quality, there's a long way for small finance banks. Today, there are already 5 listed small finance banks in India. AU Small Finance, Equitas, Ujjivan, Utkarsh, which is a newly listed one, and Suryoda Small Finance. I'm sure we'll see more listing from small finance bank in the future. But for now, I want to cover the business of top 4 small finance bank of India, that is AU, Equitas, Ujjivan and newly listed Utkarsh. Please note that the analyzing banking sector is not a cakewalk. You can't just look at net profit to decide the winner. It requires an in-depth study that includes understanding the cost of borrowing of bank, its credit underwriting process, asset quality, net interest margin, distribution network, and many more factors. And for me, the most important factor in banking sector is leadership, because a right leader would ensure a solid corporate governance, which is the foundation of any financial company. So now let us look at the comparative analysis of AU Small Finance Bank, Equitas Small Finance, Ujjivan and Utkarsh Small Finance across both business and financial parameters. So first, if you look at the distribution network of AU Small Finance, it has got its presence in 21 state and 3 union territories with 1038 touchpoints with 241 district and 722 location. And you can see predominantly it is in the western part of the country, but apart from this, it has also got presence in other part of the country. It has got 476 branches, but overall it has got 1038 touchpoints. Then if you look at Equitas, it has got presence in 18 state and union territory. It's got 927 banking outlet, 352 ATMs and has got 20,900 employees. And if you look at the presence, it has got well distributed presence in south, western part as well as northern. So it's got highly diversified presence across country. Then if you look at Ujjivan Small Finance, it has got a branch network in 25 state and union territory. And it's got 661 banking outlet with 285 district. Again, it has got presence all over the country and a nice balance across region of east, west, north and south. Finally, if you look at Utkarsh Small Finance, it has got presence in 26 state, again nicely distributed, but predominantly it is in Maharashtra, then UP, then Bihar, and it's got 851 banking outlet. So overall, nicely balanced. Overall, if we compare the network of these 4 banks, AU Small Finance has the highest network with 1038 touchpoint, followed with Equitas with 927 banking outlet. Then Ujjivan has 661 banking and Utkarsh has 851 banking outlet. Then if you look at the business breakup of AU Small Finance, the first predominant business is in the vehicle segment, which is your vehicle finance. It has got 21,000 crore of gross advances out of 63,000 crore, followed with your MSME loan, which is 19,000 crore, then home loan, which is around 4,600 crore, and then you have commercial assets. Then if you look at Equitas, it has got 36.7% in small finance, which is MSME business, then 25.3% exposure in vehicle finance, followed with microfinance, and then few other sectors. If you look at Ujjivan business breakup, it has got 59% business in micro group, followed with 14% in individual loans, then 6% MSME, 14% in affordable housing. So it has got predominant presence in micro group loans. Please note this is a bit of risky business, and that is the reason Ujjivan Small Finance last year mentioned that it want to have 50% exposure in secured loan over the next 2 to 3 years. Then if you look at Utkarsh, it has got around 63% exposure in micro banking. So again, it is predominantly into your microfinance segment. Then wholesale 11%, housing is just 4% and MSME's retail loan is around 12%. Now, if you do a comparative analysis, AU Small Finance has got 33% business from vehicle finance, that forms the highest portion, and the major reason is because it initially started as a vehicle finance company and it has got 30% business in MSME. Equitas, if you look at it, has got 36.7% business in MSME and 25% business coming from vehicle finance. Whereas Ujjivan and Utkarsh has very high exposure in micro group loan and micro lending. Please note that microfinance and micro lending business is unsecured. So if the small business fail, there is no security. But vehicle finance is a secured loan, which means if the person default on payment, you can always seize the vehicle and sell it. So that is the reason AU Small Finance has got high exposure in secured loan, which is the best part to be in, and even Equitas has got high exposure in vehicle finance, whereas Ujjivan and Utkarsh have got high exposure in microfinance, which is not a secured business, and that is the reason both of them want to ideally shift towards the secured business. Then if you look at the leadership of AU Small Finance, again Mr. Raj Vikas Verma is the chairman and MD, has got 40 years of experience. And if you look at all the independent directors and executive directors, so Mr. Sanjay Agarwal is the MD and CEO with 28 years of experience. Mr. Uttam Tibarwal is whole-time director. Then if you look at all the people of board of directors, they've got phenomenal experience. So AU Small Finance has got a superb board of directors and leadership team. Likewise, Equitas has also got a brilliant leadership team. Mr. Vasudevan PN is the MD and CEO, and he has got 2 decades of experience with Cholamandalam Group, and then mainly Vice President Head of Vehicle Finance. Then rest of the leadership is also top notch across category. And then even if you look at the Ujjivan breakup, Mr. Ithira Davis is the MD and CEO, has got PGDM from IIM Ahmedabad, and remaining people also have got huge experience. Ithira Davis has got 40 years of experience. Then Mr. Banwal Prabhakar, who is the chairman and independent director, has got 37 years of experience. So again, a very experienced leadership. And finally, if you look at Utkarsh Small Finance, Mr. Govind Singh is the MD and CEO, has got 25 years of experience. Again, all the leaders of the company are looking very prominent and got very good experience in the industry. So all in all 4 companies have got top-notch board of director and senior leadership team. Now let's first compare the deposit of all 4 companies. So if you look at AU Small Finance, its deposit has grown from 19,400 crore in March 19 to consistently at 26, 35,000, 52, 69, and this is as of Q1 of FY24, it is 69,315 crore. Then if you look at Equitas, it has grown from around 9,000 crore to 10,000, 16,000, and currently it is 27,000 crore. If you look at Ujjivan deposit growth, it has grown from 7,000 crore to 10,000, 13, 18, and now it is 26,000 crore. Utkarsh Small Finance has grown from 7,500 crore in FY21 to currently at 13,900 crore. In terms of CAGR growth, AU Small Finance has grown at 35%, Equitas has grown at 30%, Ujjivan has grown at 35%, and Utkarsh has grown at 21%. Next, if you look at the advances growth, AU Small Finance advances has grown from 22,900 crore in FY19 to 27, 35, 46, 59, and currently at 63,600 crore. Equitas Small Finance advances, which is the loan book, has grown from 11,000 crore to 15, 17, 20, 27, and currently at 29,000 crore. Ujjivan Small Finance loan book has grown from 11,000 crore to currently at 25,000 crore, and Utkarsh Small Finance loan book has grown from 8,000 crore to 14,000. In terms of CAGR growth, AU Small Finance has grown at 27%, then Equitas at 24.4%, Ujjivan at 31.7%, and Utkarsh at 27%. So in terms of advances growth, your Ujjivan Small Finance has got the highest growth, but all 4 banks have grown at a brilliant rate. Next, if you look at the gross NPA, which is again a very important parameter to measure the asset quality of the bank, AU Small Finance gross NPA has been in the range of 2%, 1%. Again, it spiked during COVID, but again fell down, and currently gross NPA is 1.76. Equitas gross NPA has grown from 2.5, again shoot up to 4% during COVID, but now it has fallen to 2.6%. Ujjivan gross NPA currently is 2.4 and Utkarsh gross NPA is 3%. So among all 4 banks, the best gross NPA is of AU Small Finance, and then Ujjivan, and then your Equitas. Next, if you look at net NPA, which is basically the final NPA of the bank, look at this. AU Small Finance has got an NPA of just 0.55. Equitas latest NPA is at 1.12%. Ujjivan latest NPA is literally 0.06, and Utkarsh net NPA is 0.3. So all 4 banks have got very good asset quality at very low NPA level. Now, very important parameter is to look at the cost of borrowing, which means at what rate these banks are borrowing money from the market. So AU Small Finance cost of borrowing is 6.5%. Equitas has got 6.94% cost of borrowing. Ujjivan has 7.2 and Utkarsh has 7.6. Please note that Ujjivan and Utkarsh have got high cost of borrowing because they've got high exposure in your micro business loan, and this is a unsecured loan, and that is the reason your AU and Equitas have got lower cost of borrowing, and this is very important parameter. Next, if you look at the net interest margin, if you look, AU has got a net interest margin of 5.7, Equitas NIM is 9%, Ujjivan and Utkarsh have got 9.2 and 9.57% respective NIM. Now, interestingly, in spite of having high cost of borrowing, the net interest margin of Ujjivan and Utkarsh is very high, mainly because they give loan at very high interest rate to the microfinance category. So ideally here I like to prefer bank that has got the lowest cost of borrowing, and that's where my preference would be AU and Equitas in terms of cost of borrowing. And the fact that both Ujjivan and Utkarsh have got high exposure in microfinance, and that is the reason they've got high cost of borrowing. Next important parameter is to gauge the profitability of the bank. So if you look at the ROE, AU Small Finance ROE is around 14%, Equitas ROE is 14.5%, Ujjivan is showing very high ROE at 29.8%, but there has been high volatility in FY22 where its ROE fell down to 13.8%. Then Utkarsh Small Finance has got an ROE of 21.1%. Then another important parameter to gauge the profitability is return on asset. AU Small Finance return on asset is 1.7, Equitas is 2.1, Ujjivan is 3.8 and Utkarsh Small Finance is 2.3. Now, although ROA and ROE of Ujjivan and Utkarsh is very high, but please note that they've got exposure in your micro loans. That's where it has got a high risk. And that is the reason if there is any problem in the economy, their net NPA will also shoot up significantly. And that's what happened if you look at the net NPA of Utkarsh, Ujjivan, Equitas and AU during the difficult times of COVID. Look at this, the NPA of Ujjivan shoot up to nearly 3%. Although Utkarsh NPA was quite low at 1.3%, it shoot up to 2.3%, but interestingly Equitas NPA was at 1.5% and AU was 2.8%. So remember that during difficult times, it might happen that Ujjivan and Utkarsh NPA shoot up higher because of their high exposure in microfinance category. Finally, if you look at the net profit of all four banks, AU Small Finance net profit has grown from 382 crore to currently at 1428 crore. Equitas Small Finance profits have grown from 211 crore to currently 574 crore. It is actually 211. Then Ujjivan Small Finance profits have grown from 199 crore to 1100 crore. Again, it's been quite volatile because 199 to 350, then fell down to 8 crore, then it went into minus, and then currently 1100 crore. And Utkarsh has grown from 1100 crore to 61 and 404. In terms of CAGR, AU Small Finance 39% CAGR growth, Equitas 28%, Ujjivan 53%, and Utkarsh 90%. Again, exceptional growth, but Ujjivan has been quite volatile. And in case of Utkarsh, it is only showing last 3 years of data, and also the fact that the base was quite low. Finally, in terms of valuation, AU Small Finance is currently trading at levels around 717, commands a market cap of around 48,000 crore, has got a price to book of 4.3 and price to earning of 31. Equitas is currently trading at 93 rupee, market cap is 10,500 crore, price to book is 1.96 and P is 15.6. Ujjivan Small Finance trading at 59 rupee, market cap is around 11,500 crore, price to book is 2.9 and P is 9.45. Utkarsh, which is the recent IPO, is now trading at 60 rupee. Company recently had its IPO at around 25 rupee and got doubled on the listing itself, and currently trading at levels of 60. Commands a market cap of 6,500 crore and price to book of 2.5 PE of 16. So in terms of valuation, which is mainly looked at price to book value, Equitas has got the most attractive valuation, followed with Utkarsh and then Ujjivan, and AU Small Finance has got the highest valuation. And AU Small Finance is the most expensive one among all four options. So based on the performance of all four banks across business and financial parameter, I have done a ranking for them. So if you look at the distribution network, AU is the number one, has got the largest distribution network, followed with Equitas, and then Utkarsh is third number and Ujjivan is fourth. In terms of business risk, AU is number one, which means it has got the lowest risk, mainly because it has got highest exposure in vehicle loan category. Second is Equitas, where it has got a good exposure in vehicle loan, which is a secured business. Apart from that, your Ujjivan and Utkarsh have got higher businesses because they have got high exposure in your micro loans. Now for me, this business risk is a very important parameter to shortlist a bank. Then leadership, if you look at it, is across the board it is good. Then cost of borrowing is again a very important parameter. Lower the cost of borrowing, better it is. Again, AU is number 1 in terms of cost of borrowing, followed with Equitas, and then Ujjivan and Utkarsh Small Finance. And then if you look at deposit growth, AU is again number 1 along with Ujjivan, and then you have got Equitas and then Utkarsh. Advances growth, again if you look at Ujjivan is number 1, AU is number 2, then your Utkarsh is also at number 2, and then Equitas at 4th. If you look at the asset quality, AU has got the best asset quality, then Ujjivan, then Equitas, and then Utkarsh. Next, if you look at the return on equity, your Ujjivan is showing highest return and Utkarsh is also showing highest return. But the catch is that in terms of consistency, Ujjivan is at number 4th, which means its ROE has been volatile, its growth has been volatile. So that is one of the reasons why I prefer AU, because it has got the most consistent growth record across parameter. Then Equitas is at 2nd position and Utkarsh at 3rd and Ujjivan is at 4th. And finally, in terms of valuation, your Equitas is number 1, then your Utkarsh, and then Ujjivan and AU. Now, if you have to pick one bank, obviously given an option, I would have picked AU Small Finance, but the only catch is it commands a very high premium as compared to the other banks, and that's where my second preference is Equitas, where it is good on all parameters. At the same time, it is consistent and it has got the best valuation. Apart from that, Ujjivan and Utkarsh are also looking very attractive, but the only catch is they've got higher exposure in microloans, which is a sort of risky segment, although the growth has been pretty good and this is just the beginning of credit cycle, so they would continue to do well. But given an option, I would first prefer AU, but since it is expensive, then my preference would be Equitas. And apart from this, both Ujjivan and Utkarsh are also looking equally good. Now, last piece I want to discuss is the key risk that you need to keep in mind, both in near term and long term. So in near term, the biggest risk factor is the net interest margin pressure. So basically, there's a pressure on net interest margin which might fall slightly for the bank, that can impact the profitability. And the key reason here is the high deposit rate. Due to competition, these banks are offering high deposit rate, which is impacting its net interest margin. And then in the long term, you got to look at the asset quality, because no matter how fast the company is growing, at the end of the day, asset quality is everything. So yeah, this is it for this video. I hope you got a good picture of all 4 banks and will give you a good data point in terms of shortlisting the right bank for your investment purpose. I'll see you next video. Till then, take care.